Hello guys, I wanted to do a quick little video on some trades that I took this week, starting with Euro USD. Yesterday I went short and I want to explain why. You see this dotted line? This represents 12 AM New York open price, which is 7 AM on this platform. As you can see, after the opening price, we consolidated, then we spiked up aggressively, taking out previous day's high. Then price rejected immediately, taking out the short-term wall, which indicates a market structure shift. Price came back. Actually, this is quite of a retracement. Nonetheless, I went short in here. I've displayed the trade that I took from the ledger, from the trading ledger. It's just at the opening price, 1 pip above it. I went short in here with the objective of these relative equal walls over here, which where sell side will be resting. As you can see, price eventually hit it late in the night. So I went short in here and covered back here, which is past one down close, where usually ICT teaches us to close trades, or at least to expect the low of the day forming. But keeping in mind that we had this objective still over here, I held on to that trade. And as you can see, my take profit was here, but I got out a little bit earlier because I wasn't sure just what price will do in the night. It could have just came back and knocked me out. And as you can see, overnight price spiked up aggressively after taking out sell side liquidity and left an imbalance with a down close candle, which is our bullish order block. Price dropped down into the fair value gap. It respected it and rallied. Today, let me just adjust this. So today this indicates 12 AM New York open. As you can see, price initially spiked up aggressively, then dropped down. But if we look at the 30-minute chart, we can see that price has formed these two down close candles with a fair value gap. And I was thinking, okay, it respected this one and rallied aggressively. So my expectation was to drop down again and to expect another rally. In other words, I expect this day to be bullish. Where I aim for is these relative equal highs that we have left from yesterday. I think this will be the draw on liquidity. And I went short in here, price went down below the 12 AM open price, which is here. Yeah, so it went down 9 pips below it. I bought it with the order block and fair value gap in mind, and as you can see, price has rallied. It's 16 pips in profit right now. Now let's go to pound. I took a trade. This is Wednesday. I went short. I went short in here and covered back here. Why did I went short here? Well, overnight price left an imbalance, which is, let me highlight that. From here to here. With an up close candle, which is our bearish order block. 7 AM again representing 12 AM New York time. Price went down a little bit initially, but then spiked up, and I went short in here. I got 9 pips of drawdown. Stop was over here, never hit. And I put my take profit here, but eventually I got out earlier because in 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 New York, sorry, in New York we got this huge retracement almost coming up, but in actually it made, there was a fair value gap here. As you can see, it took out this high, took out liquidity, and then dropped down aggressively. And here is, yeah, 5 p.m. represents the start of London close, and I just got out because I thought we might rally from here. We failed to take out this wall, but eventually overnight price dipped down, and this is where we are sitting now. So this is going to be it. Thank you for watching. Hope you learned something.